Hello, welcome to another episode of Charles Reviews. Make sure you subscribe to my YouTube channel and hit the notification button. In my last video, I spoke to you about value and how Bitcoin's value is essentially determined by its peer-to-peerness. I said that as cash, physical cash's peer-to-peerness, as that decreases over time, Bitcoin's peer-to-peerness, your ability to transact in a private manner, increases over time. And today I'm going to be talking to you about a concept called anti-fragility or anti-fragile properties and how they apply to Bitcoin. So let's get into it. So we can start things off with this article from Be in Crypto. 5 reasons why this Bitcoin rally is different than 2017. Number 1, less active addresses. If we compare where we are now to the top of 2017, there are 24% fewer active addresses today. This means that we have not yet reached the frenzy that caused the bubble in 2017. And we can see this here on a graph that's provided courtesy of Coinmetrics.io. The second reason why 2019 is very different from 2017 is network fees. Network fees are cheaper with the implementation of SegWit or segregated witness and transaction batching. Transactions are significantly cheaper on Bitcoin today than they were back in 2017. Although still averaging around $2 or so, it's a far cry from the $40 in transaction fees at the top of the bull market in 2017. And we can see this here on bitcoinfees.info, historic daily average Bitcoin transactions in dollar terms. Thirdly, Bitcoin hash rate is at all-time high. And for those of you that are in the know, miners are becoming better and more energy efficient. Ultimately, the number of computation works that are done on the Bitcoin network is growing and is now at an all-time high. What this means is that the network is fundamentally more secure than it has ever been. And we can see this on the Bitcoin hash rate chart, which is provided by blockchain.info. And finally, we have the media hype cycle, which has not even got started. Bitcoin's Google search interest is only a tiny fraction of what it was in December 2017. Likewise, the media has been slow to pick up on the recent rise in the Bitcoin rally. And we can see this here over time on Google Trends. So let's face it, the media, the crypto media and traditional media, these outlets play a very strong role in galvanizing interest for retail investors, whether it be FUD or FOMO. And we can see this in a tweet that was posted by Jacob Canfield last year. What will hit 25k first, Bitcoin or the Dow? And his argument was every time we had bullish sentiment, the market would go down. Every time we had bearish sentiment, the market would retrace and go up. The Bitcoin sentiment is all over the place for 2017 and 2018. Is America falling out of love with Bitcoin? Should we have another Bitcoin funeral? And you thought stocks were having a bad day. Bitcoin is crashing today. My point with all of this is that every time someone attacks Bitcoin, every time someone makes a negative comment about Bitcoin, every time there's volatility or a failure to understand Bitcoin, Bitcoin keeps on bouncing back stronger and stronger. I'm showing you this chart to really make the point for anti-fragility, which was a term, a concept that was invented by Nassim Nicholas Taleb in his book Anti-Fragility or Anti-Fragile. I can't remember the precise title of the book. So anti-fragile items are things that benefit from volatility, things that benefit from mistakes, failure, shocks, and other stresses on the system. And there are many examples I can cite, but we first have to understand what isn't anti-fragile so we can define what anti-fragile is and how we can apply this to Bitcoin. So in order to understand Nicholas Taleb's concept of anti-fragility, we have to first understand what is not anti-fragile. So let's discuss the concept of fragility and also the concept of robustness, because many people think that the opposite of a fragile item is a robust item, but that's false. The opposite of a fragile item is an anti-fragile item. So let's get into it. A fragile item is something like a bowl or a porcelain cup or a porcelain good or a sheet of glass or even a wage labourer. These are all fragile items. You drop the bowl on the floor, it's going to break. If you're a wage labourer and you get paid by the hour and your employer goes bust, that's it. It's game over. You lose your job. These are fragile items that are very susceptible to stresses on the system. Now, many people think the opposite of a fragile item is a robust item, but that's not actually the case. So, for example, a washing machine or a tumble dryer, they are very robust goods. They're very robust items. They're built to withstand a lot of shocks to the system. But over time, their component parts will eventually break down and they will cease to function. Also, taxi drivers, they're very robust workers. Doesn't matter if the economy is booming or if it's going bust. So that's why we have so many taxi drivers in different economic states. There's always demand for their services. So what's an anti-fragile item? Bacteria is anti-fragile. Your DNA is anti-fragile. Muscle fibers in your body are also anti-fragile. Every time you weightlift or you work out or you do some form of fitness, your muscles, they break down and they regenerate and they come back stronger. Likewise, certain YouTubers are also anti-fragile. If you look at someone like PewDiePie, I know he's quite controversial and he's actually got into hot waters in the past for making videos that have gotten him in a lot of trouble. But again, he keeps on coming back stronger and stronger. Another example I can give you is the recent WannaCry ransomware attacks in 2017 in the UK. So many media pundits, they pointed to Bitcoin and they said, oh, Bitcoin's inherently bad. Indeed, it's evil because people are using it as a form of ransomware. But fiat money, the US dollar and other national currencies are also used for nefarious or criminal activities. So singling out Bitcoin doesn't really mean that much. And this is really the power of Bitcoin. It gets stronger and stronger through market volatility, whether that's just sentiment about what people are saying of the coin online or what is actually happening in the tech scene. It just keeps on coming back. And I think this, combined with Bitcoin's peer-to-peerness, is what really makes Bitcoin special. And I think we can end today's video with a tweet from Bite-Size Capital. So this isn't the first time that anti-fragility has been discussed in relation to cryptocurrencies. Bite-Size Capital state that every argument against Bitcoin is an argument for Bitcoin. Why? Because anti-fragility, that which profits from chaos, BTC, is the world's first asset that benefits from its critics, makes fools of its hijackers, and proves naysayers wrong, even when they are right. Thank you for taking the time out of your day to watch my video. Really do appreciate it. Make sure you hit the like button and make sure you subscribe to my channel. I've also got my own Telegram group. I'll put the description down below. Thank you for watching, and I will see you in the next video.